All right, this is how I made $1,470 today day trading the S&P 500 mini futures. So this is the trade that I took. I actually took two trades. The first one was a loss, and the second one was this win right here that you can see. We're gonna go ahead and do a quick recap, just dive into why I took these trades, kind of what was my thought process and analysis and everything, and hopefully we can just learn from it. So right before we dive into it, one thing I want to mention is on the left side here I've got NASDAQ, and on the right side I've got ES, and I trade futures. I trade ICT concepts, so I look for liquidity sweeps, I look for manipulation, I look for all that kind of stuff, fair value gaps. And so, anyways, I took two trades today. The first one was a loss, and I actually really liked that trade. You're going to see in a sec, I'll show you, but I actually got stopped out by one tick. And that happens. And I remember telling myself, you know what, just don't be mad. That happens as trading. Don't let it get to you. So the good thing is I had the right idea and I had the right analysis. So that was the first trade. And the second trade was this one here. And we'll dive deeper in just a sec again. But to show you a little bit more about this trade, I actually, this is what it kind of looked like. I sort of bottom ticked it, and I don't ever bottom tick trades. I don't like doing that because that's very risky. Does it work? Yes, it can work, but it's very risky and it's just a little bit more gambling than it is actually trading. And so, was it a good trade? Yes, it was a great trade, but was the execution good? No. I should have waited. I think the reason I took this second trade was I had a little bit of emotions going into it. And so, anyways, let's dive into it and explain why I did that. And hopefully, we can learn from just maybe entering the trade a little bit better than I did this morning. So, going into the day, let's go ahead and go back to market open right here. Okay, let's drop this down a little bit. Okay, so going into market open, this is the 15-minute chart. And I like the 15-minute. Actually, let's go to the 5 minute. It's a little bit nicer. So today, just to let you know, is the 27th, February 27th, 2026. So I always look at the economic news. Today we had PPI come out at 6:30. For me, market opens at 7:30 in the morning. I am in Mountain Standard Time. I got onto the charts this morning, and the first thing I did was, let me go ahead and delete some of this stuff, was I marked out the data wick low. This was the low that was put in right here from PPI news data. And actually on NASDAQ, it was this one right here. So on NASDAQ, we put in the low, and we just swept it right after that. We swept that liquidity. And if you guys are familiar with ICT concepts, data wick or big news candles from red folder news events are very high drawn liquidities. So I wanted to see price sweep that low, which we already did on NASDAQ, but I wanted to see us on ES sweep it and then displace to the upside. So what happened was not just that, but also when I was doing my top down analysis this morning, I noticed that London highs were also equal highs right here on NASDAQ. So let me go ahead and turn on this little indicator that I use. So London was the same high as yesterday's PM session, and that means we've got equal highs, and equal highs also means a really high draw on liquidity. So if we're already here this low, right, on the external stuff, the big picture stuff, we swept out this low right here. Actually, I mean, you get the idea. There's that green line. We swept out previous day lows and we put a data wick. So that's kind of like a double liquidity sweep if you're thinking about it, right? We sweep that, and we sweep the lows from yesterday, and then we double sweep it right there, right? That's our little money sweep right there. I know my drawing sucks, but you get the idea. And knowing that there was not only equal highs, the London high session and previous day highs from the PM session, but there was also two 4-hour fair value gaps sitting up here, right on top of each other. They were unmitigated, which means they have not been touched yet, which also serves as a high draw on liquidity. Same thing that I'm pointing out on NASDAQ was happening over here on ES. However, we did not have equal highs. The London highs on ES were just a little bit lower than these highs on NASDAQ. But we did have the two 4-hour fair value gaps. And something that I've been trying recently is using equilibrium, where you just take the 50% range or 50% from that range. So I took it from the top to the bottom yesterday to this morning. And it's very common for another draw on liquidity. Price tends to want to pull back to 50%. It's kind of like a 50% discount at a store, if you want to think of it that way. That's how I was taught. So, anyways, with all that being said, it was looking really good for longs, right? It looked like we wanted to come up, and after we swept this data wick low right in the morning, hopefully at market open, then we can come all the way up here. Would we actually get all the way up there? I mean, maybe that on NASDAQ is like 300 points. That's quite a bit of movement in one day, especially because yesterday we moved a ton. We went all the way down here. And usually when you move a lot in one day, the next day or so, half a day will be a little choppy. So that was my draw was up here, but I didn't know if we were necessarily going to get all the way up there, which is totally fine, right? We can always target like halfway up the range like that. So, anyways, that gives you the perspective of what my thought process was this morning. I wanted to look for longs right at market open. Now, let's go into the 1 minute time frame and let's go into market open. So this is ES. This is, let's see, what time is this? This was 1 minute before market opened. We have still not taken the data wick lows. I wanted to see on ES a sweep of this and then movement to the upside. And that's where we can target all these things up here, right? The London highs are way up there, so it might be more ideal to target any of these highs or these ones. I know my lines are super crooked, but you get the idea. So anyways, market opens and this is what we see after the first couple minutes. Let me go ahead and zoom in just a little bit so you can see a little bit better. Okay, so market opens and we go straight up right there. And this is where I started to think about my first position, my first trade. On NASDAQ, we swept this high right here. And at this time, I was like, oh no, like I hope we don't just start going up and I miss a trade entry for a long. I really want us to sweep these lows on ES first. And we never swept them on these little highs right here on ES. So given the fact that now there is an SMT divergence, if I can draw this out a little bit for you guys, that tells me that we failed to go higher on ES, but we did on NASDAQ. So that's telling me that it is now a bearish confluence. I was like, okay, cool. That means if we fail to go higher on ES, that probably tells us that we want to come down and sweep these lows first, and then we can take that long that we were talking about. So this was just a couple minutes after market open. Typically, I don't actually like to trade the first 10 to 15 minutes in market open because it's really choppy and wicky and there's a lot of volume right when it opens. But this one was just too good of a setup. I didn't want to miss it. So I noticed that there was this little 1 minute candle or this 1 minute fair value gap on ES. I told myself if we can come down and close below that and invalidate that candle, that fair value gap, I would love to take a short and put the stops at this high and then target the data wick low. It would be just about a 1-to-1 RR, 1 to 1.25 ish. And let's fast forward a couple candles, and that is basically what happened. So we wicked into there a little bit, and right here on this candle, I believe I entered the trade. It was actually like maybe about right here, somewhere right there. I put my stop not at the candle high, but one tick above it, just so that I know that if we do get stopped out, then that completely kind of contradicts my idea. And I guess it was just below a 1-to-1 RR. This was just a small trade at the beginning of the day, but I felt really good about it. And this is what ended up happening. It was about to hit my take profit, but then we came back and I got wicked out, literally wicked out by one tick. And I told myself when that happened, I was like, okay, you know what? Like this is trading. If you guys are day traders and you're wanting to be a day trader, this type of thing is going to happen and you need to live with it, because I've had so many times where this has happened to me and I get so mad, and then I try and revenge trade. I try and get back into the trade really quickly, but sometimes that means it's going to completely flip on you. Then you lose again. Then you lose again, and then you lose a fourth, fifth, sixth time, and it just never works out. So that I literally told myself out loud. I was up at the computer in my house in the office trading, and I was like, okay, this is trading. That's part of it. Just let it go, right? That's not my real trade that I want for today. It was a great trade execution, but I'm looking for longs. Now that we've swept these lows, I'm looking for longs. So I was like, just suck it up and let's figure something out here. So the first trade, I think I followed my rules great. I think it was an A plus setup, and I'm totally fine with it. The second trade, I don't think I followed my rules perfectly to the T. There was one thing that I broke, and let's go ahead and dive into that. We also swept these little kind of relative equal lows on NASDAQ. So it's kind of a, I guess you could say, a triple liquidity sweep on NASDAQ. If you want to, I don't even know if that's a thing. We'll just put a little money sweep down here. So anyways, we got that. Let's go ahead and get rid of these things here. And now I'm looking for longs, right? I want to see momentum to the upside before I start taking a trade. But this is where I broke my rules. I ended up looking at the 30-second time frame on Trade-of-8, and somewhere at the bottom of this candle, before this white one, before this bullish candle, I ended up entering the trade like right there. I told myself as soon as I saw price go up, I was so sure that we wanted to go up. This was like the strongest draw on liquidity that I've seen like all month, all February. I was so sure that it was going to go up, but I did not wait for a setup. It would have been better if I waited literally just one more candle right here and taken it off of like these two little fair value gaps. If we just inversed those and maybe like retested this inverse fair value gap, like anything, I could have waited. But I ended up, I wasn't trying to bottom ticket. I gave myself a few points to breathe here, but I didn't really calculate my risk well. And I told myself, like, okay, like if we get up here, as soon as we got up to here, I moved to break even because I was like, that wasn't smart. I don't want to lose anything on this. Let's just move to break even really quick. So I got lucky on the trade execution. The OTE, which is optimal trade entry, would have been up here somewhere, or maybe a little bit of a retest right here with this candle. So anyways, that's what I did there. And I was down like 350 from this first loss. And I'm on an eval, and I guess I didn't make $1,400. I made like $1,700 or $1,800 because I won that loss back, and then I won $1,470 more. So it was probably about $1,800. I actually went in with two minis on this because I felt so good about it, which is another thing I probably oversized, giving the fact that it was a bottom tick. So anyways, let's just fast forward. After this, there's not really much more to be said. I mean, I moved to break even real quick, and I thought about taking one mini out at these highs because there was also a 1 hour fair value gap right above us. Here it is. So at those same highs, there was a 1 hour fair value gap. And I was like, I should probably take at least half my position out. But I was like, you know what? I've never been so certain about the draw being higher with the London highs, all these 4 hour gaps, these other highs, right? The equal highs on NASDAQ. I'm just going to let both minis ride. Because if this were a funded account, I would take one out and secure profits. But I'm actually on an eval right now. And I typically like to trade evals a little bit more aggressively, which means I add size to it. That doesn't mean trade more. That just means add more money to your trades and still wait for those A plus setups. So I kept in both of the minis, and I wasn't going to try and target London highs because that would get me like thousands of dollars that I didn't need, because if you guys are familiar with how to pass an eval, you've got consistency rules. You can't make too much money. You have to make just the right amount. And if you don't know all these things, just do your research, because sometimes you might make $3,000 and pass your eval, but then your prop firm will message you and say you didn't meet the rules. There's requirements that you have to meet, and that's happened to me. So I told myself like, okay, this is a 50% consistency rule, which means the most I can make on this trade is $1,500, right? Because my target profit is 3,000 to pass this eval, so I need to make 50% of that. So I ended up taking out, I don't even know where I got out of the trade. It was somewhere around here, I would say. But if we just fast forward just a couple minutes, let's go back to the 1 minute time frame. You'll see that price it consolidated for a sec. It was showing a little bit of pressure to the upside. Wasn't doing it as quickly as I wanted. It was sitting in that fair value gap, this inverse fair value gap for a while. But we ended up finally displacing to the upside. And I don't know exactly where I got out of the trade, but I was just watching my profits. Typically, I don't do that when I'm trading funded accounts and I'm actually going for normal wins. This is just an eval, so I'm a little bit more aggressive. But the one thing I want to show you guys is, like I said, this wasn't the best. Like, yes, this was an insane win. I made quite a bit of money and all that stuff. It was a great setup, but I didn't have a good entry. I had too much of a gambling mindset entry. And so, well, something I noticed is the best entry here would have been on NASDAQ. After we started going up, there was this little 3 minute fair value gap that I noticed. And I told myself, I'm like, okay, I got a little too greedy over here and entered early, and I got lucky, I think. But I think the best setup would have been on the retest of this gap. However, the hard part is you would have to have some really high or a really big stop loss, which isn't the end of the world. You can just, like, if this were my account and if I were taking that trade, which I probably should have taken this one instead, I probably would have just done like a couple micros because a couple micros would have been the same amount as two minis over here, right? If you know how sizing works, do your math. It's not that hard. Just add it up. 85 point stop loss, or maybe you want to go off of this low here, right? There's different ways you can do it. I would have done it at this low because there's like these same little inverse fair value gap right here as well. But anyways, it's up to you guys. Everyone uses their stop losses differently. I still think the best stop loss setup is putting it at the below the whole, you know, liquidity sweep slash manipulation leg. Anyways, this is the best setup. And this is where I probably would have waited for price if I took this one to get to maybe this significant high to take out for either break even or probably take profit one. And I probably would have taken most of my position out over here if I were have to have taken this trade with micros. But I didn't. I took it over here with minis. Still a great trade. I just got a little greedy. And this is the biggest lesson that I want to show you guys. Let's see. Let me just go up here and kind of draw it out for you. This is something that I was thinking about today. Let me draw two boxes. Think of these as check boxes. The first one is draw on liquidity. And the second one, we're going to say a way to get there slash a setup slash your strategy towards your liquidity. Let's say that towards the DOL. Okay, so I was after I went trading or after I traded, I went snowboarding today because it's my day off from class, so I wanted to just have some fun. While I was literally snowboarding, I literally said out loud, like on the slopes, I was like, okay, really trading is only two things. Like if you, after you've understood psychology and you have a setup, you have a strategy and all that stuff, trading is really only two things. You need to draw on liquidity and you just need a way to get there. Today, we had both. We had a great draw on liquidity, these London highs right here, and we did end up having a decent way to get there, but I didn't wait for that. So I'm gonna start literally putting this like in front of my face and I'm going to check these boxes off. If I only check one of these, but the price just starts going straight up towards the drawn liquidity, there is no way to get there. And don't try and FOMO trade. Don't try and get in somewhere because that's not a good, that's breaking your rules. Sometimes you might see a nice liquidity sweep, a little fair value gap, unicorn breaker setup, if you know what that is, or a little retest, and you might see a great way to enter a trade. And so you can check that off the box. Jeez, it's huge. Um, anyways, you might check that off the box, but if there's no drawn liquidity for price to go to, then don't take the trade, right? So that's something I learned today. Hopefully that makes sense, but I'm literally going to make like a little checkbox, like maybe on my phone or on the computer that I use to trade. I'm just using my laptop right now, but I'm gonna make a physical checkbox so that I can check it off every day when I'm trading because without these two together, you're gambling. Like there's no doubt about that. There you can't try and argue that you're not, and that's just the way trading is. So, anyways, like I said, I took two trades. The first one was a loss, second one was a win, and I had the right idea. Fast forward to later today, market is it's Friday and market's closed now. We actually never even ended up getting to those London highs. We kind of just sat in this area for a little while. And so that kind of tells me that I think on Sunday when market opens, it wouldn't surprise me if we went like straight up here, or maybe we even manipulated these lows and then we went up again, right? There's all kinds of things that could happen, but I still think that this draw up here is very it's a nice draw on liquidity. So it would be nice to maybe think about that Sunday or Monday next week when we get back onto the charts. But hopefully you guys understood kind of my thought process to these two trades that I took today. One thing I will say before I wrap things up is it is Friday, and it is statistically proven that Fridays are the most common days people blow their accounts because they want to finish the week on a good note. They can't mentally be okay with seeing a red number, a negative number like minus two, three, 400, or even thousands of dollars. Um, that is just don't become a statistic. I like to watch PJ Trades. He's been one of my mentors for a while, as in just watching his stuff for the past year or so. He has really good information, and that's what he says all the time. Almost every Friday, he tells all of his Discord members, don't be a statistic. Don't let the market control you. If you take a loss on Friday, make sure it was a good loss, right? Make sure you risked appropriately. Make sure you didn't gamble. Make sure you didn't try and get back into it and revenge trade and all that stuff. Last Friday, I posted a YouTube video and I blew my account. This Friday was 10 times different. I still think I could have done a little bit better, but it was the right idea, and I'm happy with how I took care of it today. But still, the next Friday, I'm looking at performing even better than I did this Friday. So Fridays are same as every day. They're all trading days, but it's also pretty common to have lots of day traders kind of mentally be exhausted and their mental capital is just gone by Thursday or Friday. Yesterday was the day for me. I took a bunch of trades yesterday and it was horrible. But today was a lot better. So, anyways, hopefully you guys can understand kind of the thought process behind these trades. If you have any questions, comments, things that I can do to get better, if you have questions on some of the words, terminology that I'm saying, leave them down in the comments and I'll try and get back to you guys. And I will definitely just do my best to help you guys out because trading is freaking hard and it sucks. But, anyways, we'll see you guys in the next one.